Hello, Chris from SMC Effects here. So in our previous trade breakdown of GBP USD, we also mentioned that we took a similar short setup on Aussie US dollar. So these two trades, they were taken live within our live stream on our Discord. So each morning during London Open and occasionally during New York Open, we will stream our charts, show people what we're looking at, and if we've got a trade set up, we'll take it there and then. This is not to be confused with a signal service. We do not show precise entries. We talk about where we would look at where we are interested in taking shorts or longs from, okay, but we're not giving you a signal to say, right, buy or sell here. You need to go through the course content and you need to learn how to do this yourself. You can't rely on other people to spoon feed you trade setups. So with that in mind, let's have a look at the higher time frames. So as you can see here, recent price action is currently bearish. Okay, we've come into this low here, so we've got a demand zone around this point here, and then if we then look on the 2-hour time frame, we've also got another demand zone just below. Okay, so this around here would have been our 4-hour demand zone. We've also got another demand zone down here, and this is the one that it seems to be mitigating currently. So this demand zone is something we're going to keep ourselves aware of. Reason for this is obviously price is currently bearish. If we do get a strong reaction from this, then we'd need to break something like this high for us to confirm a continuation from this demand zone. But currently, as price is bearish, we are more interested in shorts because the shorts are going to be pro trend, because this demand zone, when price reacts to it, hasn't created any bullish commitment. But until that happens, we will be happy looking for shorts. But if we do get some kind of shift in market structure on the lower time frames or a change of character, something like that, then we will obviously react to the markets and trade accordingly. So I'm not going to mark this demand zone because I am aware it's there. I'm not currently looking to take longs from there. If we, like I said, if we do get a shift in market structure on the mid time frame or the lower time frames, then we will trade accordingly. So now we've got a higher time frame trend in mind. We're going to have a look on the mid time frames. So mid time frames, I tend to look at somewhere between the 15-minute and the hourly. I usually class that as mid time frame. If you want to class that as something else, it's up to you. But this is when I refer to mid time frame, I'm talking from, between the 5-minute and the hourly charts. So then as you get into like the 4-hourly and above, that's how I refer to higher time frames. Okay, so let's zoom in. Let's have a look at what price action is showing us right here. So straight away, we've got a couple of areas that we could be interested in here. We've got this last buy before the sell. And in the previous video, we spoke about looking to see if there's anything above that is quite close to your zone of interest, to see if there's any reason price could come and tap into that and sweep the previous zone as liquidity. So this is what we're going to keep in mind. So at the moment, this is an area that we're expecting to be swept. And this is an area that we're expecting to, take a trade from. So this is what we've got on the 15-minute chart right now. We're printing some internal liquidity here. Okay, so we've got some imbalance still. Obviously, at one point this whole range, this whole bit of price action here would have been imbalance. We've still got a little bit left now. If we then drag this across, we can see a little bit of imbalance is left. And then that confluence, along with our smart money liquidity trap here, can give us a reason for price to come back up to this area and can continue with the bearish trend on the higher time frames. So this is what we're looking at on the 15-minute. So let's have a look on the 5-minute. And this is the point where we're going to start refining some of these zones, make them a bit clearer and easier to read. So what I'm going to do, the top zone here, I'm going to refine this on to these candles. Okay, so we've got the last buy before the sell. But the reason you can see I've probably included this wick here. Reason for that is obviously this is the buy candle before the sell, and that wick does have a bit of buying pressure still with inside it before we then get the push down. So this is why I'm including that wick, because there's still a little bit of price action that we could be interested in. Because there's still a little bit of price action within that has influenced this push down. Now for this zone here, what I'm going to do, I'm going to refine this to this area here, and there's no wick to worry about on the sell candle here. So we're just going to concentrate on this one. So like I mentioned before, the red zones here, these are the areas that we're expecting a lot of novice or inexperienced smart money traders to be rushing into the market. So this is what we look at these sort of areas as inducement. Okay, these are the areas that impatient SMC traders are going to be trying to get into the markets because they think, oh, this is the most recent zone. It's very impulsive and you know, we've got liquidity here and stuff like this. So they'll be talking themselves into a trade around this, and then when it blasts through, taps into something above and goes in their direction, they're sitting there scratching their head, thinking, why did that not work? And this is something that's happening more and more recently within smart money concepts. People are seeing this happen more and more often, and what they're not doing is adapting to the market. So this is a point we're expecting traders to be induced into the markets. Okay, we've then also got some internal liquidity here. Okay, so IL, internal liquidity. So we've got some highs here. We're expecting this area to be swept. So this is then creating any highs around here as potential liquidity points. And like I said in the previous video, liquidity is very subjective. You know, you could be looking at support and resistance areas as liquidity. You could be looking at other SMC traders as liquidity. You could be looking at trend lines. You could be looking at patterns, all sorts. So if you're looking at liquidity, there isn't really a solid answer as to where liquidity exactly is, because we can only speculate. We don't know where all the other orders are. We don't know where everyone else's stop losses are. We can only speculate on our experience where we understand majority of traders are likely going to be. So a lot of price action traders could have their stop losses above highs. Okay, we could have some people looking at some kind of pattern within this. Okay, we could have, again, like we said, SMC traders trading off imbalance or fair value gaps and stuff like that. So these are points that we would anticipate where liquidity is, but you can never truly know exactly where the liquidity lies because it's all over the place. And like I said, it's very subjective depending on the trading style. So like I said, this is an area that I'm expecting to get swept, and along with this. So from this point, what I'm also looking at doing is trying to plan ahead. If I am looking at taking a trade from here, I'm also going to be thinking about, right, where will I want my target? Now, I already understand that this low is already encroached into a higher time frame demand zone, but taking longs from that demand zone, like we said earlier on, would actually be counter trend on the recent price action. So right now, the most probable thing that we'll be looking for is shorts. But keeping in mind, we do have that higher time frame zone that is currently been tapped into down here. So with that in mind, I'm not going to be trying to take a target of, 100, 200 pips. I'm not going to be looking for a big, 100R trade, anything like that. All I'm mostly interested in at the moment is continuing the trend, keeping in mind this higher time frame zone and having a short moderate target. So with that in mind, what I was looking at, we've got, if we look at this entire session here, we've got, this is the Asia range. Okay, we've got the Asia highs here, we've got the Asia lows here. So the area that sticks out to me is around here. So this is somewhere where I'll be looking to target, because as we discussed in the previous video, quite often Asia lows or highs do get swept. Now if I'm targeting a zone that is not quite at the edge of the Asia lows, if I have my target just shy of this area, there's more chance of my take profit being hit. So what I then wanted to do is then have a look to see what this zone looks like on the lower time frame. As you can see, if we put this line across here, you can see it's just tapped into it ever so slightly over here. So I want to have a little look to see if there's any more reason for price to come back towards this area. And we do actually have this zone here. So if we keep a similar logic in mind of how we looked at these zones up here, this is likely going to be our trap zone that I'm interested in. So right now we can see that the Asia session is coming to an end and London is getting ready to open. So let's advance price forwards. So straight away, as we can see here, we have this zone tapped into. We can see we're getting a reaction from this, and straight away, like we said in the previous video, when we get these reactions, some people may have been taking a short from here. We may get a slight reaction to somewhere down here, maybe a bit further down. Okay, and some traders could be in very good profit. Maybe, if we do reach somewhere down here, maybe, their trade could be in profit for a good period of time and have like a yes, amazing, my trade's running good, and there's going to be a lot of traders trying to get back in there, or even trying to catch a continuation from this area as well. So this in itself is going to start generating quite a bit of liquidity, especially as London's now opening, we're getting a reaction from here. So let's advance price forward again. And there we go. Right, so if anyone did take the initial trade here, depending where they got their stop losses, if they were aggressive with their stop losses, if they did get to break even after pushing past this point here, they could have been taken out with this spike here. If they're more conservative and they didn't have that stop loss at break even and maybe up here, they could then be looking at this impulsive move as they push down. They're then sitting in a nice amount of profit. and likely to get their stop loss to break even from there. But one thing I'm then keeping an eye on is my target still hasn't been reached. If this does get reached before the trade taps in, I'll then lose interest in taking the trade. And here we are, we're getting the retracement now. So any traders that were taking a short from here, as price pulls back up, they're likely either taking it at break even, or as you see, we've now had a wick above here, and it could then have been potentially taken out at a full loss if they hadn't had stop loss to break even. And this is something I see so many times. A lot of traders will be taking trades like this and then getting really upset, questioning, oh, smart money doesn't work, my trading doesn't work, trading's a scam, whatever. But they're failing to consider this is a very obvious place for a lot of people to be trading from, especially with the popularity of smart money concepts. There's clearly going to be a lot of traders trying to take a trade from this area. So let's keep advancing price forward. And now we've had this liquidity grab. Again, this is something else that could then start inducing more traders into the markets that, oh, we've hit stop loss, but now price is going off in my favor. And what they'll end up doing is either trying to take a revenge trade and maybe looking at some of these zones within here. Okay, so we've got this point of interest here. We've then obviously got this candle here. And a lot of people are going to start looking at these areas and think, right, I need to get back into the trade, and they're going to start revenge trading. So you could have taken maybe 1 or 2 losses around here. Now let's keep watching price action, because again, we're looking at taking a trade from here, and spoiler alert, I did take the trade from here. We know what's happened. So anyone trying to take shorts from here again are then going to start getting burnt. So here we go. Anyone trying to get into this, we've clearly had a reaction. Okay, price is pushing back up, and we're now likely going to see a sweep of this area at some point as well. And again, start thinking about where the obvious place that smart money traders are going to rush into the market. Now, when I say smart money traders, I'm not generalizing saying every smart money trader is stupid. I trade smart money concepts. I'm talking about people that are rushing into the markets. They're impatient. They are getting hit with FOMO, and they don't want to wait. They're expecting to make profit quickly. You need to understand trading is a marathon, not a sprint. And here we go. Right, we've tapped into this zone here. Let me just pull this back a little bit. Right, so we've tapped into this zone. We've obviously swept all liquidity that is potentially within these areas. Okay, we've then got these equal highs, which is currently pushing up to sweep that. Okay, and the point that we're actually looking at taking a trade from is around here. Now, let's discuss the entry. So in the previous video, we spoke about we took a market execution, and I explained why it was a market execution, because there was a zone above the area that I wanted to trade from that had the potential to also be mitigated. So I basically had one trap zone and 2 areas, this one and one slightly above, that I was anticipating either one of those, they were close together, but either one of those could be the zone to be trading from. So we waited until we had a reaction for one or both until we actually got into the trade. This particular trade, we didn't actually have a zone above that we were that concerned about. So with this one, what I did do was just set a limit order. So as price is coming close to this, I've then looked at this and I thought, right, I'm happy with this. I'm happy with the way price is setting up. We still have an unmitigated demand zone, and taking a short at this point is then still pro trend with current price action on the 4-hour. So everything ticks the boxes for me. All right, I've set my target just shy of this demand zone. I could have had it about here. That still would have taken profit, but I like nice round numbers, so I just went straight for 6R. So let's advance price forward. Let's see how this plays out. So here we go. Trade has now been activated. We are in the trade. Okay, and as you can see right now, here's another potential demand zone. Okay, so we spoke about quite a few within this area here, how some traders will be looking at the big moves thinking, oh, I need to get into this order block, I need to get into this order block, wherever. And here's another one where, as some of these highs are now being swept, people are looking at thinking, right, well, we've got 1 minute bullish order flow, creating newer highs, we've got higher lows. But with that perspective, we're then not keeping in mind what is going on the mid time frames. This is all 1 minute price action. These are 5 and 15 minute zones. So now we've got this high which has been broken. We've had candle closes above here. A lot of people will be looking at this and thinking, right, well, this is the zone that has broken that structure. We must take a long from here, and keep watching. So we can see we've already had some kind of reaction. We just remove the Asia range. Okay, so you can see we've got some kind of reaction already. Price is tapped into it and we're pulling back away. And at this point, a lot of traders think, oh, winner, I'm finally in a decent trade. And then this happens. So if someone does have a long from here and they've got their stop loss just on the other side of this zone, they'd either take it out break even if they were aggressive, getting their stop loss to break even around here, or most likely full volume. Now, the zone that we're anticipating as an unmitigated demand zone was tapped into, as you can see here. And there we have it. That's the thought process behind the Aussie US dollar trade that was taken. So like I said in the previous video, there's two trades taken on this day, both of them roughly at a similar time. So it was the Aussie US dollar short and the pound US dollar short as well. So the pound US dollar was 10.9R. This trade was 6R. So it was just shy of 17R for that day. So that was quite a good day. So guys, hopefully you found this useful. Hopefully you've taken a few little nuggets of information from this. Let me know in the comment section below if you're finding yourself getting into these trap zones that we spoke about, you know, things like this long here, a short from here, shorts from here. Let me know in the comments if you're falling victim to these, because I'll be interested to see. But apart from that, if you've got this far to the end of the video, thanks for watching and I'll see you in the next one.